Hello, everybody, and welcome back. Today, my guest is Wong from Eastspring Investment. Ken is a client portfolio manager and a China specialist. And today we want to discuss recent developments, China sustainability and opportunities in technology stocks. Welcome, Ken.
Thank you.
Ken, China recently announced that it wants to be carbon neutral by 2060. To what extent can the country's technology sector contribute to this goal?
We see that in particular for China right now. There's a lot of government policies really pushing towards, that goal of 2060. And in particular, what we see right now on the ground in China is a lot of developments within the EV space, within specifically solar power, renewable energy. So this is something that the Chinese government and again across a lot of the provincial governments as well have been really sort of making an emphasis. And again, from an investment standpoint, that's why we've seen a lot of EV related companies, and we've seen a lot of sort of renewable or solar companies doing very well in China. So we actually think that 2060 should be a viable goal. And obviously, China is also pushing for some nuclear power as well. And again, that should also kind of sort of alleviate some of the concerns over carbon emissions, and sort of allow for China to continue to meet that deadline of 2060 for carbon neutral as set forth by President Xi Jinping.
Hi there, just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
So 2020 was clearly a year for Chinese technology stocks. To what extent has COVID-19 changed sustainable thinking in China?
The fact is that, when you look at where we are today, and of course, the past couple of months, we've been really, we've been very much been on a roller coaster ride where, the technology, like you mentioned earlier, the technology stocks in specifically, they performed very well in 2020. But then over the past couple of months, because of some of the crackdowns that we've seen in some of the larger Chinese technology sectors, especially internet, that's created a bit of question marks as to specifically how China's evolving, I would say especially on the S part of ESG. Now, some of the recent crackdowns that we've been seeing on the internet sector, and particularly on the education sector in China, has much more to do with specifically the social inequality that's been going on. A lot of middle class families were spending a lot of their time and money on after school tutoring. Their kids were spending a lot of time on specifically online gaming. And that really created a lot of uncertainty and sort of social issues within China, which the Chinese government is trying to alleviate right now by regulating some sectors a bit more. Now, has some of these regulations been a bit too rigid? We suspect that there are some which especially Western investors would be concerned about. But at the same time, you have to realize that this is one way of China really tackling ESG from their point of view, especially from the S side.
To what extent is the Chinese government creating an impetus and a framework for a greater adoption of ESG factors within technology companies?
Yeah, I mean, the thing is that, we talk a lot about, sort of the E and China, how, they're doing very well already in that aspect. The S part is also something that they're trying to work on now as we speak. I think the biggest hurdle right now within China across, technology companies and not just technology companies, but across, other companies as well, is really the G. The overall governance part within China is going to be something that, continues to be a work in progress. And we feel that, as time progresses, the overall G, in terms of how companies can govern and provide more clarity. I think that should be a very important aspect that, not only private companies in the technology sector need to continue to do more of, but, we expect for, some of the state-owned companies to do more as well. And the Chinese regulators are setting specifically, sort of more rules and more guidelines in order for companies to be, sort of matching, or at least not matching, but specifically disclosing their, sort of various ESG related events when they report their annual reports.
Which sustainable technology companies will particularly benefit from the new awareness for ecology and sustainability in China?
The type of companies, I think I mentioned earlier, we think that with the policy support, these EV, these renewables, these solar related type of companies are really going to be the ones to really stand out in this particular, sort of area where we're in right now. Again, the EV space, and again, not necessarily, focusing on the actual, manufacturers of the vehicles themselves, but there's a lot of suppliers of EV materials which are really expanding their footprint. Some of the companies, for instance, right now, if you look at, for instance, with Teslas, the ones that are being made in China right now, especially the Model 3s and Model Ys, the batteries now actually being supplied by a Chinese battery maker instead of, sort of relying on the South Korean battery makers from before.
How can investors benefit from this new trend towards sustainable technology in China? And are there any examples of interesting stocks that you have in your portfolios that you might share with us?
Yeah, I think I just mentioned earlier, sort of, one of the EV battery makers. It's one of the sort of larger A-share companies. And the fact is that when you look at, a company like Contemporary Amprax, the benefit of this company, and when you look at its share price, it's really taken off over the past, sort of 3 to 6 months or so, is really the fact that, the company is now really expanding their footprint when it comes to developing batteries, not only for, electronic vehicles in China, but they're really expanding their footprint when it comes to developing and, sort of making batteries for additional EV makers all around the world. And I think this is really where, China is trying to become a leader, which is not necessarily, who's putting more EV vehicles on the road, but it's really about who, in terms of from a supplier standpoint, who will be able to provide, a lot more of the components and parts to the various EV makers all around the world. We know for a fact that, a lot of the even traditional car companies are now coming out with their own versions of, electronic vehicles, and we expect that to continue to grow. And so as a result, a lot of these suppliers will stand to benefit as a result of having more EV vehicles on the road. And this is really that, sort of, I would say the new competition between China and the US is to be who can be more, sort of, who could be more environmental friendly and who can actually be more green, especially with President Biden, putting a lot of emphasis on really trying to focus on the push, for a cleaner society, more green within the US. So I suspect, you're going to see a lot more competition between China and the US in this particular space.
What about the availability of ESG data in China, and how do you integrate them in your portfolio decisions?
Yeah, that's a great question, because the fact is that, there's a lot of, sort of international vendors. So for instance, companies like MSCI, they provide ESG scorings for quite a number of companies in China, actually. But the fact is that there's also locally published, ESG providers, companies like Harvest or Ping An, or even or like a data vendor like Wind, who also provides that data. But for us as a whole, what we also need to do is when we evaluate companies, our analysts will also have a checklist in regards to specifically, what do we ask these particular companies? How do we score these companies, and how do we evaluate these companies, sort of on an E, a S, and a G standpoint? And it's also important to see the improvements that these companies are doing on each front. So it's not only understanding what these companies are doing now, but it's about keeping track and having an internal, database, which can allow us to keep track of specifically, how these companies have improved on each of the factors, and to see really whether or not they have really made an improvement and have really been able to, sort of promise on, some of the enhancements that they're trying to make on the ESG front. So I would say that, yes, it very much is still a work in progress, but, Chinese companies are, disclosing more and more information. I think MSCI came out with a note stating earlier that roughly about a third of the Chinese companies that they send ESG surveys to do provide, a response, which is somewhat similar to the amount of response that they're getting from emerging market companies. So I would say right now that Chinese companies are definitely improving when it comes to their overall disclosures on ESG. And it'll be very interesting, to see over the next couple of years whether or not that amount of disclosure will continue to increase. But in between, there's still going to be gaps. And that's really for us, as investment managers on the ground, is to really go and, understand what these companies are doing and potentially look at other, for instance, news sites, look at specifically some of the various other disclosures, some of the other information made available to us to try to understand more about, potentially what some of these companies are doing.
So this was Ken Wong from Eastspring Investments. Thank you very much, Ken, for being with us today and sharing your insights in latest Chinese sustainability trends.
My pleasure.